So hi everybody, and welcome to the first part in our how-to series. And this is how to create a cash flow forecast. Now, this is possibly one of the most critical things you can do for your business is to learn how to A, set a cash flow forecast up, and then B, what we're going to show you in our second video is how to roll it over. Now, in the first instance, all we're wanting you to do is populate the cash flow forecast with the correct information. I've got my colleague Tyson here, who is going to be helping me, and we are going to literally be talking you through a step-by-step process as to how to sort out and start your cash flow forecast. Now, for all of our clients, if you've got any questions, we are here to help. Sarah, Nikki, Stefan, myself, and Tyson, you know we're all here for you to help you make this easier. So, Tyson, if you want to get the screen share going, that would be awesome. So what we're going to do is we're going to start off here with the instructions. And we've gone and made this as simple as is humanly possible. So Tyson, if you flip over to the instructions.
Certainly.
So, for our clients, we are going to be sending you, to make this easier for you, we will be sending this information to you. So I'll be sending you your current debtors, your current creditors, your profit and loss statement, and your balance sheet. But this is the basic information that you need to be getting out prior to starting filling out your cash flow forecasts. And if you just see on the right hand side, we've even color coded this for you so that you can see which document you use for which part of the cash flow forecast. So we've really done our best to break this down and make this step by step and as much as possible color for numbers, okay, or color by numbers. Step 3 is, and what we're going to do now is we're going to, well, not quite yet, but I'm going to talk you through the instructions, then we'll go and do it. Next step is to then go to the cash out, fill in the details using the color coding system. Next step is cash in, then go to the cash flow summary, and make sure that you remember that the first goal here is just to get all the information into your cash flow and get the information precise. And then we've also got a few common errors that people have, omissions that people have not put in place. So just, once you've gone and done your first go at this, just come back here and say, have you entered the figures for the entire 26-week period? Have you inputted GST on amounts where required to be GST inclusive? Record wages, tax inclusive. Averages have been used, so use the averages where possible. And not including payments, the ATO. So these are all things you need to remember that you're actually doing, okay? And Tyson and I will do our best to remind you as we go to put these things in so you don't have to come and edit it later. Beautiful. So go to the instruction sheet first, familiarize yourself with this. Now, Tyson, step number 3, let's go to the cash out.
Sure, there we go. So here we got cash out. All right, awesome.
Excellent. So I'm going to hand over to Tyson here. And he's going to use our color coding system, and he's literally going to just show you literally what you need to do. Now, I encourage you to take your time here. Be kind to yourself because this is the first time you've done it. Don't get frustrated, and also do not procrastinate. This should not take you very long as you're following the instructions. So Tyson, over to you.
Okay, right guys, so obviously we're not going to go through every single line item because there's just obviously too many there. So we're just going to pick a couple of the big ticket items and some of the more easier items that you're going to be able to pick out off your information and get the information into the cash flow forecast to start. So what we're going to do first is basically just look at suppliers. Now, I've got a fictitious example here where I've kind of got sort of preloaded data, so we're just going to work with that. Okay, so in this first case, we're just going to have a look at the age payables report that was extracted out of this example. So basically what we're going to look at, this first one, is just the MIDI's data and electrical. Now, obviously, this is a major supplier in this example. So what we're going to do is we're going to take this information and put it into the cash flow forecast. Now, I'm just going to move this across on my page. Now, what we're going to do first is essentially in the suppliers column, we're going to go in and literally just put in the data, the name of that particular supplier. So MIDI's data and electrical. There we go. So if we look at this age payable summary report, we can see here that the oldest amount that we have due on account is basically January. From there, we have Feb and March. So let's go ahead and input this into the forecast. So I'm just going to move it across my screen. Now, obviously we've gotten to the end of the week now. So we're recording this as of sort of the 24th of April. Now, we're not actually planning on making this payment, so we're going to pop this one in the following week. So if we remember what we had on the report, it was 3,004. So essentially, we're planning to make this payment in the forecast next week. Now, if we fast forward the following 4 weeks, if we remember, the amount was 15,008. So essentially, this is basically what we're obligated to pay on account for that particular amount. And then if we fast forward again on the statement, so we'll basically leave another 4-week period, we have the 9,872. Now, these are basically payments that you're going to make. So there's no ifs, buts, maybes. This is exactly what is going to be leaving the account. Now, obviously, there might be a little bit of uncertainty if we kind of look ahead in the forecast, because it's 26 weeks. And I mean, this only covers 3 months. But what we can basically do, let's just highlight these amounts. And we actually have an average here. So if we look down the bottom, we're essentially on average with those 3 amounts, we're just over 9 grand. So obviously, in the interest of trying to get the data complete, we can just go ahead and enter that amount. So let's just leave 4-week gaps. And there we have it. We basically have pretty reasonable information here. It covers the whole period. Oh, sorry, I missed one. And that deals with that first line item. So what we're going to look at now, if we
just 1 second, Tyson. Just before we go to the next one. Yep. So guys, please do just make certain. Keep this simple. Go to your creditors, look at your suppliers, find the facts, find the information, and just go and put it in for each and every one. If any of you have got lots and lots and lots, like hundreds of suppliers, just give us a quick call, and we've got a couple of little hacks that we can help you with just to make that a touch simpler and less complicated. But for all the rest of you, put them in exactly as Tyson's described. So Tyson, now that we've completed the supplier section, you're going to take us over to the profit and loss, and you're going to show us how to take some profit and loss items and insert them into the cash flow forecast. So over to you, mate.
Yeah, excellent. All right. So what we'll do, if we just open up our profit and loss, we just want to touch on 1 or 2 little line items that will basically get you started in getting the data into your cash flow forecast. So what we're going to do, let's just pick up an easy one. So obviously the expenses that don't change every month, that's going to be your first go-to. So if we look at this line item for rent, it's $600 net GST every month. So what we're going to do, we're going to look at that. We're going to go back to our cash flow forecast. Now, if we go back into the forecast, there'll be a line item for our business premises outgoings for rent. Okay, so what we need to do now, we basically need to gross up that 600 for GST. Now, to do that, we simply just times it by 1.1. So we basically take that figure and we have $660. Now, what we need to do is basically align that amount with when do you actually pay that in a month. Now, in this example, we're just going to say that we basically pay our rent in the very first week of the month. So basically take that $660 and we're just going to copy and paste it into each of the starting weeks of the month. So on 4-week cycles, we'll just go ahead and do that. So that line item is now taken care of. Excellent.
So Tyson, if I heard you right, and you are the numbers man,
yep.
I'm the business coach, you're the numbers man. Now, from your profit and loss, if I'm hearing you correctly, what you need to do is you need to make certain that the numbers in your profit and loss are not going to include GST. But what we need to do from a cash flow forecasting perspective is make certain that the number that we're putting in the forecast includes GST.
Correct, Damien.
So that's what you did. You just added 10%.
Yep.
So the rent went from 600 to 660, and it includes GST.
That's right.
Beautiful. Thank you, mate. Back to you, because I think you're going to go to wages now, aren't you?
Yes, yeah. So basically, one of the other big ticket items that we see quite often where it basically needs a little bit of tweaking is in the net wages. So if we were to basically have a quick look at go back to the profit and loss, we can essentially see here that is our gross wages per month is roughly speaking about $27,000. Now, what we need to do is basically get that into the forecast. So we're just going to go back to the cash flow forecast. Now, what we need to actually do here is record the net. Now, net is what we basically pay our employees. Does not include tax because obviously you're paying that, generally speaking, either monthly or quarterly to the ATO. So in the forecast, you'll see we have net wages, super, and PAYGW, which is the tax portion. So what we're going to go ahead and do, obviously every week is going to be different depending if there's overtime, but we're essentially just going to put in an average amount. So we're just going to say, for the purposes of this example, our net wage bill per week is $5,500 per month. So we go ahead and we enter that into the cash flow forecast. Now, what we need to do is account for the tax. Now, we're just going to say in this example that we pay monthly. So obviously what we're going to do now, if we basically go to the first week of the month, is we're basically assuming here that we're going to be paying the ATO about a week after the month end. So what we're going to do there is basically enter the tax portion. Now we're just going to use the figure of 6,000, and we're going to enter that into the first week of each calendar month, which you can see there. Beautiful. Now what we need to do secondly is account for the superannuation. Now you'll either be paying on a monthly cycle or a quarterly, but what we're going to do here is basically just do it on a monthly cycle, just to be simple. Generally speaking, your superannuation is going to be 9.5% of your gross. So we're just going to use the simple figure here of, let's just say $3,000 a month super. So now we basically just go and enter it into the first week of each month. So same again, we literally just go to the same cell and enter that in. So now we have the superannuation dealt with. Excellent.
Beautiful. What we're doing here is we're basically highlighting what you need to do. Now, from the profit and loss, you need to be just exactly the same way that Tyson did it. Bring over all the line items as per the template. The template will guide you. We spent a lot of time making sure that the template is really thorough and full. What Tyson did with the wages is just give you some of the detail that you need to be thinking about. Are you paying weekly? Are you paying monthly? Are you paying bi-weekly in terms of when you're paying people? Remember that the number that is showing in your wages needs to not include PAYG. And Tyson's just showed you, how you can break those numbers out. So just remember to keep those ones separate. Next, what we're going to do is we're going to take you to the balance sheet. And just Tyson's going to show you where you find some of these other items. Now, green is the color code for the balance sheet. So just remember to go to the balance sheet. Tyson, over to you. Here you go. You're going to be shown how to do this.
Okay, great. All right, Damien. Thanks, Damien. So what I'm going to do, we've just gone to the balance sheet in this example. Now, we're just going to pick two items very quickly. Now, let's just have a look at the motor vehicles here. So obviously we have loans for these particular vehicles. Now, what we want to do is basically figure out what we're paying per month. So if we just quickly just do difference between these two amounts, we'll know what we need to do. Now, obviously, you can just go into your bank statement to pick up these amounts. So what we're going to do, let's first look at the Ford Ranger. Now, we know that's $890 per month. So if we go back to the cash flow forecast, let's literally just put in Ford Ranger. And we want to use $890 a month. Now, obviously, generally loans are direct debit, so they're going to come out at the same stage of every month. Now, let's just say. Tyson,
let me just pause you 1 second again, because your genius is amazing. My brain sometimes works at a slightly different pace, which is perfect. Now, I go on the balance sheet, and the balance sheet is going to show me how the items that I need to look for.
Yep.
Now. If I've got the balance sheet as a month-to-month view, which is what you had, I can either work out the monthly payment, but by basically seeing how much the related loan is going down every single month, which is what you did. So you basically used 1 month and then took away the next month from the previous month, which gave you the monthly payment.
Exactly right.
Or you can just go to your bank account, and your bank account will tell you how much your monthly payment is. Exactly. Sorry, just wanted to clear that up because. As again, you are the genius. I am merely your apprentice.
Okay, so what we're going to do then, basically, if we remember the figure that we had, it was just purely $890 a month. So let's just assume that this is paid on the 15th of every month. So what we go ahead and do, you can see that this column here lines up with the 15th of May. So that's when the next payment's going to be made. And then we basically do the same again. 15th falls in this week that ends on the 19th. So we go ahead and enter it in there and basically fill that out vice versa. So now we've accounted for all of the loans that payment is going to run for the next 26 weeks. And then same again, what we're going to do, just go back to the balance sheet. And if we remember the second loan there, which was for the LDV van, it's $567 a month. So let's account for that in the cash flow forecast. So let's just rename this guy back to LDV van. And let's just say, just to be different, we pay this in let's just say around the second or the third of every month. So we go ahead and we enter that amount in there. So let's just do the same again.
Okay, brilliant. So what Tyson is really wanting to highlight for you here is just the importance of putting the payment in when the payment leaves your account, because the timing of payments in a cash flow forecast is essential. Great. Now I think we've got the overall idea here, Tyson. There's the items in green. Go and look at them on your on your balance sheet. That's where you'll find them. Our clients, obviously, we will have sent all the information via email to you so that you've got this information. You don't have to go and find it yourself. It'll be given to you. And just use the color coding system and keep on just chipping away line by line by line and just fill in the information, making sure that you put it in when the amount leaves your account. Okay. Now, next, we're going to go and look at the cash in. So this is what the cash in looks like. Thank you, Tyson. And the items in green, in gray, the work in progress, forecasted sales. Now, these are things that we will go into more detail with you in the not too distant future. Work in progress, quote registers are all things that our clients are going to, very quickly become familiar with very early on in whatever program you're working with us on. Okay, so don't worry about those yet, because our process will mean that we will give you full briefings and exactly what you need so that you can fill in those details later. What Tyson's going to show you now is just how to fill in your age debtors, how to fill in your current debtors. Over to you, Tyson.
Excellent. Thanks, Damien. All right. So if we just go back to our information, we basically have our age receivables. Now, it might be called something slightly different in whatever program you're running, but essentially this just lists everyone that owes money to us. Now, what we need to do is basically transfer this information into the cash flow forecast, because these are all going to be hitting the bank account at one stage or another. Now, I'm just going to work with this on my other screen just so I can insert the information. So I'll just move that across. Now, if we have a look at our oldest ones, they're basically sitting in January. So what we're going to do, we're just going to pick the oldest ones first. So if we basically just go into our age debtors, we want to put in the oldest customer. So in my instance, it was ABC Body Corporate. And obviously, we're the 24th of April, so we want this to be paid next week. So we're going to go ahead and enter that amount that debtor owes us. Also, we have one of the old ones, we have A&B Property. So they still owe us money. The amount that there was $242. So we'll go ahead and basically enter that amount. Now, obviously, you'll need to go through and enter every single line item on the age receivables list. Like Damien mentioned before, we do have a couple of hacks. If the list is too long, like if you have hundreds of debtors, there's, get in touch with us. We can show you a few shortcuts to kind of navigate that instance. Now, what we're going to do, we're just going to go down to our current debtors. So this is everything that's sort of you billed in this month, you haven't received yet. So let's go ahead and we'll pick a few little examples. So we'll just go ahead and put smart builders. Now, as per the report,
you go and, Tyson, can you just go and flip back to your screen just so I can see the source information that you're getting this from?
Sure.
That's it. Beautiful.
Yep.
Okay. So what Tyson is basically doing, age debtors, okay, are the, for example, January. These are people that owe us from January. These people really should be paying. February, as an example, again, we're now in April when we're recording this. So, there's 4,000 that really should be paid. And March, again, these are all amounts of money that really should be paid. These would be, in our language, your age debtors. What Tyson is now talking about is he's now talking about where is he going to put in our current debtors. So these are the people that we billed. Dependent upon your payment terms, they are within terms. So let's just say I completed some work for you and I completed the work today being the 24th of April. I would expect you to pay within 30 days, so effectively by the 24th of May. So what Tyson's now doing is he's now just showing you how you would input your current debtors. And because cash flow forecasting is all about when the payment leaves your account or when the payment enters your account, he's just showing you a little bit of the detail here as to what you need to be aware of. So thank you, Tyson. That was good because I'm now seeing, right, for my current debtors, I'm getting, where I need to go to do that. So can you just quickly show us where you would put that into your cash flow forecast?
Sure. So we have down here, so we're split up. So aged, so that's everything that's old, and here are the immediate amounts. So if we just quickly go ahead and we'll just enter one of the amounts. So we have smart builders, the amount was 9,933. So let's just say we expect this money to hit our account in the week that ends on the 15th of May. So we'll essentially just go ahead and enter that amount. And we'll do one more just for sake there. So we'll just choose another one. So we'll just use this one called Solar Stuff. Very exciting name there, but we'll just run with it. And what we'll do, we'll literally let's just say we're expecting that money to be received on the week ending on the 8th of May. Now the amount on the age receivables report was 11,328. So the process from here is essentially to go through every single one of those line items on the report and input when you expect that money to hit the bank account. It's just a matter of going through and just making sure that you don't miss anything.
Beautiful. Alrighty. So can you just go back to the instructions for a second, Tyson?
Yep.
So what we've now managed to do is, you had your source data. So your source data was your debtors, your creditors, your profit and loss, and your balance sheet. So we had all of those. Now, if you're a client of ours, we will email that to you. We'll make this super simple for you. The next thing is to remember the color coding. So current debtors, current creditors, balance sheet, profit and loss. So as we've shown to you now, dependent upon whether you're doing your cash in or your cash out, the color coding system is here to help you. Now we've gone and taught you through your cash out, and we've helped you, and we just started to show you what you need to do in terms of you go to your current creditors and you go to your profit and loss, and just use the template. Allow the template to be your guide. Everything's listed in there. And if you just calmly, and calmly is often the word, because sometimes when people get a little bit, I can get a little bit excited when I'm looking at my numbers. Obviously, Tyson being the mathematical and numbers man that he is, he gets all excited. I can get my heart rate can go up a little bit, and I can get a bit overwhelmed. But just remember, it's all about just chipping away, follow the instructions. And, if you need help, pick up the phone, call us, because that's what we're here to do. So we've gone and taught you through the cash out tick. We've gone and taught you through the cash in tick. Now, the only thing really that is remaining is just to go to the cash flow summary. We're going to go there now. And Tyson, just talk us through the summary page and what we need to do with that.
Yep, thanks, Damien. So essentially, the only cells that you can touch on this page are the ones highlighted here. So everything else has been locked, so nothing can get broken. Now, the only data that we need to put in is essentially the week ended date. Now, obviously, this week is coming to a close, so we're essentially going to use the next date. So we'll go ahead and we'll enter the 1st of May 20. And there we go. It basically auto-populates the rest of the template. Now, step 2, we basically just have to enter the closing balance at bank. So let's just say, for simplicity's sake, last week on that closing date, let's just say we had $65,000 in the bank account, and we basically just enter that in there, like so. And also, if there's a credit limit on the bank account, like an overdraft or a line of credit, you basically just enter the amount there, and it's easy as that.
Beautiful. So Tyson, let me now, for everyone watching this, for simplicity's sake, we are recommending that you update your cash flow forecast on a Friday, because it's the end of the week, and every Friday we want you to be going into your cash flow forecast and updating it. So whenever you're watching this recording, what we want you to do as a date is we want to put whatever Friday is the Friday that is coming up, and that will be the starting date for you to use. Your balance in the bank, or your opening bank balance, is literally that. If you've got several bank balances for your business, add them all together, and that would be your opening bank balance. In terms of your credit limit, do you have an overdraft facility? Do you have a line of credit? If you do, put that amount in. If you don't, ignore it. Okay? Very simple. Let's keep this all super, super simple. Alrighty, now Tyson, let's go and come out of the screen share.
Yeah, sure.
Now that effectively concludes our number 1 in the cash flow series, how to create a cash flow forecast. Thank you all very much for joining us. I encourage you to, rewatch this video, use the template, go one step at a time. And, if you're a client of ours, give us a call, because that's what we're here to do. We're here to support you. We've now supported thousands of people creating their cash flow forecasts. We're incredibly expert in terms of getting this critical document complete as quickly as possible. Now, there is a second video, which is how to roll over your cash flow forecast. And this will come to you once you've actually got this one complete. Thanks for joining us. And we look forward to seeing you in our rooms and around the world very soon. Thanks for joining us, guys. Bye-bye.